Candlestick trading, right? Candlestick trading is usually the first thing a trader learns when they enter the market. It's level 1, right? It's the beginner stage of anything to do with markets and technical analysis, reading candles, Japanese candlestick analysis, wicks, dojis, gravestones, all of these terms that I honestly have no idea what they mean. But everyone starts with candlesticks. To understand the market, technical analysis, people think that you have to understand candlesticks. Now, throughout this video, I'm going to show you that candlestick analysis isn't really that useful, nor the epitome, and how you can actually build up your candlestick analysis without necessarily using too much of every single individual candle. Reading every 5-minute, 2-minute, I'm going to show you that whatever kind of candlestick you use, a range bar, a bar chart, a just general 5-3 time-based chart, whatever it is, Renko, it doesn't matter. Whatever candlestick type you use, I'm going to render it fairly useless with this video and breaking down how to use candlesticks way more effectively than you originally thought. So let's get right into this video. Right after this intro, I want you guys to hit that like button, that subscribe button, and let's dive right into these screens. All right, we're back behind the screens, and today, as I said in my intro, my argument is not necessarily against candlesticks, just like completely bashing candlesticks. I want to show you guys how you can actually improve and juice up your candlestick analysis as well as alternatives on how to read them. So my main argument, my main aspect is that no matter what kind of candlestick you look at, like I have a 2-minute chart here on the left-hand side on the S&P 500 futures and a 12-tick range bar chart here, or a 3-point range bar chart on the right hand side. No matter which one of these you look at, my argument is that looking at individual candles, right, candle by candle by candle, is not going to necessarily get you anywhere good. It's not going to give you too much information. Now, a big argument is that specific candles, longer bodied candles or wicks can give you a lot of information about what's going on. Now, although that technically has some truth to it, it's not like every single wick. If I take like 300 wicks in the market and like dojis or whatever, they're not always going to give me some kind of indication of what's going on. Now, if I trade candlestick by candlestick or base it off of these specific wicks or whatever is going on, I'm usually going to have a much wider stop realistically, because whether I take wicks to the upside or downside is going to give me some kind of different result. What I'm trying to get at is the context of the market overshadows whatever the candlestick might be doing. Because an individual candlestick, it doesn't necessarily tell you who's buying, who's selling. You might see aggression, but maybe after the fact. Because if we look at this like 5-minute candlestick, for example, or this 2-minute candlestick, and you have a big red candle that comes in here, right? This big red candle, I don't necessarily know if it's going to be a continuation to the downside or a rally to the upside realistically that gets rejected just because of a big red candle. A lot of people might think, okay, well, that's a huge red candle that happened. Let's start selling this. This looks pretty good. So in this case, it works. But if I see this massive red candle and I start selling at 70, let's say on the S&P, it gets down to about like 66, 65. So depending if you're satisfied with that or not, right, that's not that big of a move. So if I'm selling back into these areas and it starts rallying, well, I get stopped out. You have a few wicks down here where you can say, okay, this thing's bottoming out. Okay, fine, right? You have a few wicks at the tops here. You can say it's topping out. Okay, fine. But what happens in reality, right? You have this overbearing candle that rejects this candle. You think, okay, maybe I could start shorting this. But in reality, we start moving to the upside and prices keep rallying. So if I'm looking at these individually, breakdown candle by candle by candle, it's not going to get me very far realistically without the overall context of what's happening. Or, right, another factor, understanding what the buying and selling in each candle is. So that's where the footprint comes into play. Now, you've probably heard, look inside the candle. You can see the buying and the selling inside the candle if you look at the footprint. I believe that's a very valid argument, but I think context generally rules overall. The main argument that I'm trying to prove today is that regardless, range, bar chart, time, Renko, whatever, Heikin-Ashi, whatever kind of candle you're looking at, if you understand generally the movement of the candles grouped together and the overall movement and context of the market, you're going to have a better understanding of candlesticks rather than looking at them individually. Because I can Make the same argument here, right? With these 12 tick range bars, they have some wicks around. They have like large downside moves, large upside moves, but it's not individually going to tell me anything. If I'm looking at, okay, higher highs, higher lows, right? That gives me more of an understanding of what's going on. If I look at the areas that we're trading, that gives me more of an understanding of what's going on. So 2 ways to begin with, right? Even before jumping into the overall big context and jumping into the footprint aspect of trading these candlesticks, is understanding the rotations and the higher highs and higher lows that these candles present. So it's not so much what these individual candles do, right? You see dojis, blah, blah, blah. It's more so what's actually shaping up in this market, right? Whether it's a time chart or whether it's a range bar chart. So if I'm looking at this and we get a spike rally up here and then we get a massive drop, a lot of people might be looking at this thinking, oh, okay, well, shit, we should start selling this rally. We should start selling rallies back into this area. These guys should hold and we should start dumping aggressively, right? This thing just rallied and we got a big drop that went against it. Now, same concept here. If I'm looking at things a little more clearly, though, I can see that we started the rally from here, right? There were a lot of rotations into the lows. Okay, big deal. Some rotations into the highs. Fantastic. So we started the rally from here. We make a push. We make a higher low, and prices come back to the same area that we sold off from. So at that point, right, from a general perspective in terms of looking at this contextually, I'm actually looking at a potential grind higher. So regardless of what these candles do, I'm looking at the overall image and vision of this market and what it's actually telling me. And it's telling me, realistically, these resistances are probably not going to hold that much, right? So I can look at this and say, well, I probably shouldn't be selling here. And if I'm selling here, I really need to see these like lows break. And that's kind of a hopium trade rather than understanding, okay, what's actually going on with these things. Now, the second aspect more so comes in when we start talking about the footprint as well as some of these rotations. When you get rotationary action like this, it's starting to slink lower, slink lower, slink lower. But what's really going on here? Because if you're starting to slink lower like this, a lot of people might think, oh, okay, wow. Well, this actually looks like it's rotating to the downside. Maybe we start selling rallies and then this thing just pops immaculately. So that's where I want to bring into the footprint, because the footprint, like I said, visualizing what's inside of the candle. The footprint allows you to see the buying and selling that comes in every individual candle, whatever you're looking at, whether it's a range bar chart, whether it's a time-based chart, you see who's in control. So I'm looking at a general 12 tick 3-point candle footprint here. So every 12 points is going to create a new candle realistically. And I can see who's in control within the candle, the buying versus the sell. This footprint chart is representative of delta. So I can obviously see who's buying and who's selling, but more importantly, I can see who's in control of the buying and selling at those levels within that candle. Now I can look at this on a 2-minute, a 5-minute. It doesn't matter what kind of time frame or what kind of candle specifics, if you want, we're looking at, but it matters more so how the interactions are coming through with these buyers and sellers and the overall imagery of the context that's shaping out. So again, if I'm looking at this, right, down into the rotations, this is what you don't see on the candlesticks themselves. Down into these rotations, what's actually happening right now? So we are slinking lower, yes, we are slinking lower, but what is happening at a certain point is the creation of a lot of negative delta where aggressive market selling is trying to come into this low along with passive market buying that's creating these very, very big congested areas of negative delta. So when we stack these up and we can see, okay, this is the full culmination of that negative delta, you're starting to see within these candles that, yeah, they're trying to push, but to no avail. So if I look at that from just candlesticks, I'm looking at this as like lower low, lower high grinds, right? Where I can say, okay, this is about to break out, this is about to break out. But in reality, what's happening is that people are trying to sell aggressively into the lows, but they can't budge, and the buyers are passively trying to bid this back up. So with that understanding, I can say, well, this honestly looks like an area where I can try to pinpoint some of these longs. Now, if I want a little more confirmation, maybe I'm not buying exactly these lows, but I'm looking at where these positive deltas are. And if we can bid above them, that means that the buy side is on, right? That's the buy side is on. Now, you could potentially look at that from a candlestick perspective, but I can hold this out based on these continued massive buyers that keep stepping into this market all the way up until eventually what happens is you have a lot of aggression into the highs and they reject very, very harshly, right? So at that point, I say, okay, no more longs. We are good to go realistically. Now you get this massive drop off. The candlesticks might tell you, hey, listen, this looks like a big sell shaping up. We failed at this high. Big sellers are coming into this market. So what can we do about it? Now, if I look a little deeper into the footprint and I start comparing the buy side versus the sell side on the way up versus the way down. So the way up, we have just impressive, immaculate buying, right? Aggressively doing so. And I'm trying to pinpoint areas where we can call it naked, quote unquote, buying, if you will. Meaning that there are areas where there's heavy, heavy positive delta that has not yet traded, right? So it's pretty much this area over here. And that's about it, right? Maybe over here, down here, but nothing really sticks out other than that. So if I compare all of this aggression to the upside versus what happens to the downside, the only real aggression I see on the downside is over here, as well as down over here. So this whole move from about, let's say 73 all the way down into about 60, these 13 points don't necessarily have too much strength on the downside momentum. Right? Even this whole move, as you look at it, the delta on the day, it's still positive at that point. So if I'm looking at this and I see, okay, there's a certain point where these sellers no longer are strong sellers. The buy side comes in and it's more reactive realistically. When that comes into play, then I know, okay, there's a very big possibility of a higher low shaping up. So where's that higher low based on these like negative traders over, or these naked traders over here? You can see from this candle over here, right? We say, okay, there's a strong resistance. The sell side's in control, let's say, right? I want to sell from that area, especially over here. We can sell from this area. Everything's good to go. We're going to start breaking lower. If I understand what's going on within the candles, I know that people are trying to sell into lows continuously and prices just keep going up. Every time a big seller comes into these prices keep going up. So I'm a little against the idea of the sell trying to continue. If anything, I'm trying to pinpoint where I could be a buyer in this move. Now, if we take a look at what happens here on these candles, you have this huge aggression, right, against all this buying. And you're like, oh, okay, wow, well, these guys, like once they start rotating and creating wicks, massive doji wick, whatever you want to call it, right? Massive rejection over here. Let's start selling these moves. But the reality of the situation is, the continued buying that happens within these candles is telling you the positioning of the market on that day is to the upside. So one of those big factors that we can just juice up our candlestick analysis is actually understanding what's going on within those candles. Another thing that we talked about right at the beginning of this video was context. Context overshadows the idea of these candles and individual candlesticks. Right, we put context together with the footprint and what's going on. We have a very, very good idea of what the directional bias looks like rather than looking at these candlesticks by themselves. So all we're doing is trying to strengthen our overall candlestick analysis here. So when I'm looking at what's going on contextually, like we said, we have higher lows that continuously press, and we can't make new lows from those highs. That's one big factor. Another factor that we could start pulling into this is probably like a volume profile, for example. If we look at volume profiles, what I have right here is I've already identified what these balances look like, right? So I have balances like this, right? There's a huge balance over here. So theoretically, yes, we are technically bearish under this balance to stay within the balance. But we make a peak above that balance and we can't really continue the momentum within that balance. That alone is telling us, along with what happens within these candles, that the projection is to the upside. Everyone gets jammed into the lows. We move above the balance itself, and we start piling in the longs that come into this market. So if I look at this again, if I grab a little more context from this volume profile, right? Over the last few sessions, last few days, we've created this balance. You can see over here, this very heavy volume balance that sticks around like this. The top end is somewhere at 68, we can say. So yes, theoretically, contextually, we should be looking for the sells below that. But when we create a lot of volume into the lows and we have a failed auction on the overnight, you have a failed sell from a peak above that high, The auction is telling us that, hey, you know what? There's more fish to fry on the upside than constantly trying to sell this because of a few candle failures or a few wicks that are manifesting into these highs. So what I'm trying to do right now, what I've ideally proven, is that if we're looking at these candles individually, if we're looking at the candlestick analysis where dojis might be, where these large rejection candles, where these large fluid candles come into play, we're not necessarily going to get that much information that guides us in terms of the actual overall context of the market and what's going on. So I want to tie a few things together. Number one is the general context, right? The general context where I can pull it out of the volume profile, for example. Now, other people might pull it out of some different areas where they understand like the balance or rejection based on XYZ. But I'm very, very concentrated on what's happening on this volume profile. So if we start moving above this balance high, right, and we get a push and they can't come back down into the balance low after we make an excess move, that's telling me that, listen, there's probably buy momentum on this. The other aspect of context is trying to identify how these areas trade and the fluidity of lower lows, lower highs, or higher highs, higher lows, right? We get this push, right? Okay, we fail. They try to sell back into it. We don't even get to the area where they get congested, and we come back into the same high. That's a harsh no for me in terms of continuously selling it. The third aspect is diving into the candle, taking a peek of what's inside. What's inside these candles is that every time you see a momentum to the buy side, right? Every time throughout the day that we saw momentum move to the buy side in this market, it overshadows whatever large selling comes into play. If I'm looking at who's in control within these candles, right? Even if I look at these last few presses, so they pull up, there's still constant buying, people that are getting trapped on the short, they dump down. And where's the biggest seller that we have? Right over here. This big seller just gets eaten up by the strength on the buy side. The continuous buying that happens with all the positive delta that's overshadowing whatever negative delta comes into this market is telling us that the directionality and the context of within these candles is indeed trying to press higher and higher. So I can evade the short from that. So to wrap this up, long story short, is that candlestick analysis, right, by itself, I don't think that it has too much benefit, right? For me, I want to wrap a few things around those candlesticks in that analysis and get a better vision and get a better understanding of what's going on in this market, right, from these candles. And I don't mean individual candles by themselves. I mean, as a whole, contextually, groupings of candles that create large moves, failures of moves. We can see it through the footprint, what's going on inside, as well as the overall context of the market. So I want you guys to take a look at that, right? It's a new way to visualize and understand candles to give you a better understanding of actual candlestick analysis. We just beefed it up a lot more. So with that, right, I want you guys to go try that out, back test it, see how it goes, and let me know down below if it improves your candlestick analysis and you've learned something new today. Also, let me know what other kind of videos you guys want to see, and we'll get to them.